Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the first quarter of 2023. That stock is Occidental Petroleum, and this stock is a favorite for Warren Buffett. He's been buying a lot of shares of this recently, so in this video, we're going to look into some of the recent news that came out surrounding OXY. We're also going to look at their financial statements and then use a discounted cash flow model to figure out the intrinsic value per share for OXY. And so, for starters, this article right here is titled Warren Buffett Keeps Buying Occidental Petroleum Stock as OXY Stake Nears 25%. So basically, Warren has purchased 3.46 million OXY shares for more than $200 million over May 16th and May 18th. And he also picked up 1.2 million shares on a Thursday. And then his buy range for those past 3 days was around $58.11 to $58.66. And then right here, they point out that Buffett now holds 217 million OXY shares worth about $12.7 billion total, or about 24.4% stake in the entire company. So Warren owns about 25% of OXY now, and he has invested about $12.4 billion. He owns around 217 million shares. And if I scroll down here, they point out that in his most recent shareholder meeting for Berkshire Hathaway, he talked about how he's not going to be making an offer for control of Occidental. But in August 2022, the Federal Energy Regulatory Commission granted Buffett and Berkshire Hathaway approval to purchase up to 50% of OXY if he wanted to. And he said that he's happy with the shares that he currently has. He might have more or less in the future, but he does have warrants to buy a substantial amount of stock, and glad that he has them. And warrants, for those of you who don't know, are basically options contracts that give someone the right to buy more shares in the future at a given price. So very interesting. Obviously, this is a favorite for Warren Buffett, and we're going to see if this stock can continue to improve their share price and their shareholder returns in the future. Right here, these are their financial statements. I'm going to look at their balance sheet, income statement, and cash flow statement. For starters, we can see comparing December 31st to March 31st, total assets are down from $72 billion to $71 billion. And then we can see most of their business is financed by liabilities because they only have about $30 billion of total equity. And of that $30 billion, about $17.3 billion is in retained earnings. So they do have a good amount of cash to return to shareholders if they want to. Then right here, this is their income statement. We can see revenue year over year for the first quarter has declined from $8.5 billion to $7.2 billion. And net income has declined from $4.6 billion to $980 million. So that is obviously a massive decline in earnings growth. Occidental Petroleum obviously was one of the companies that experienced the massive uptick in earnings growth during the period of high rates of inflation when the energy prices were soaring. But since then, their earnings have unfortunately declined. The energy industry is pretty cyclical. It has ups and downs based on the changes in oil prices, so this is obviously one of the downturns. Right here for operating cash flow, we can see that year over year, operating cash flow decreased from $3.2 billion to $2.8 billion for the first quarter. And we can also see they paid out dividends of about $320 million, and they also purchased treasury stock of about $730 million. So in total, they returned about $1 billion to shareholders, which is pretty good, but I think in the past they've probably done a little bit better, or at least there are other energy companies that we've seen like ConocoPhillips or ExxonMobil that are paying pretty high dividends and putting a lot of money into repurchasing common stock at the moment. Then right here, this is a discounted cash flow model to figure out the intrinsic value per share for Occidental Petroleum. Yahoo Finance is estimating that the company is going to grow at around, or not even grow, but decline at negative 17% for the next 5 years. They had free cash flow of $12 billion in their most recent full year, $19 billion of debt on their balance sheet, and 890 million shares outstanding. That puts their intrinsic value per share estimated to be $45 per share, which means that at the current share price of $59 per share. They're currently overpriced slightly based on these growth estimates. Now, obviously, if you're going to anticipate that Occidental Petroleum was going to grow with literally any sort of positive growth rate into the future, then that would probably boost the intrinsic value estimate. And that would mean that OXY, if they were able to maintain those growth rates, would probably be trading at a bargain at the current share price. But obviously, I encourage everyone watching the video to do your own due diligence when you're analyzing these stocks. Then right here, this is a competitor analysis comparing OXY to some other companies in their industry, Chevron and ConocoPhillips. We can see that across the board, OXY has a higher gross and net profit margin than the other companies. ConocoPhillips has the highest return on assets. OXY also has the lowest price to earnings ratio. They're currently trading at around 6.7 times earnings. And then we can see that Chevron has the highest dividend yield out of the three companies. They pay about $3.16 for every $100 you invest into Chevron, but OXY only pays about 83 cents for every $100 you invest. So if you were going to compare them based on profit margins, you probably want to give it to OXY, but based on dividends, you probably want to give it to Chevron. And lastly, I want to compare them to other companies we've looked at in past videos. We can see that in terms of intrinsic value per share, OXY is currently trading at about 100 or 1.3 times their intrinsic value per share at the moment. I was supposed to update these share prices. They're a little bit wonky right now. I'll fix that for next video. They shouldn't be that high, obviously. But they are currently trading at about 1.3 times their estimated intrinsic value per share, which is good enough to get them into the 7th place spot. Right now, Google, GE, and Etsy are the only three companies that are trading below intrinsic value that we've seen recently. Then in terms of growth rate, we saw that OXY had a negative 17% growth rate, not good enough to get them onto the growth rate table. Chipotle has the highest at 26%. For gross profit and net profit, OXY has a 47% gross profit margin and a 36% net profit margin. So it's not good enough to get them onto the gross profit table, but it is really good for the net profit table. They almost came in first place, pretty much neck and neck with Microsoft, both at 36%. So it's really close. So definitely a really good net profit margin for OXY. And then lastly, for stock performance over the last 5 years, we can see OXY has had a negative return over the last 5 years. They're down around 30%. Definitely not good enough to get them onto the table. Tesla has the number one spot at about 1,000% return over the last 5 years. So based on this, it looks like OXY is very competitive for net profit and decently competitive for intrinsic value, but not really for anything else from the companies we've looked at. In their industry, they're also very competitive. They have some of the highest profit margins compared to their competitors. But based on this discounted cash flow model, we can see they are currently not trading below intrinsic value per share. So let me know in the comment section down below what you guys think of OXY. Is it a buy at the current share price? Let me know what your thoughts are. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.